If you have some debt or credit card high utilization, do not listen to those companies that tell you to stop making your payments to do debt consolidation. What they don't tell you is that they're going to ruin your credit for the next 3 to 4 years. You're not going to be able to get cards. You're going to be delinquent. They're going to be calling you still, the lenders that you're not paying, all so that they can help you consolidate your debt. And it's just not worth it. It's not worth it. Been there, done that. This is why now I'm a funding broker, because that happened to me back in 2022. And now I had to learn all of this. So I want to teach you how you can consolidate your high interest debt from credit cards, going from compound interest into simple interest by moving them into a personal loan. Okay, so there's multiple things that we got to look at. Okay, in general, we're going to need at least a 680 credit score to be able to qualify. Now, it can go as low as 600 credit score, but it's going to depend on a couple of factors, which we're going to start with your income verification, right? Right now, in general, lenders are looking more for 700 plus, but 680 will get you good rates. And of course, 600 plus is not going to give you the best rates, but even if you get something high, remember, this is simple versus compound. And what you can do is you can just hold it for the next 12 months, 24 months, and we can give you, let's say, 60 to 72 months. You get the lowest interest, the lowest monthly payment, and if you can pay it off sooner, there's no prepayment penalty. So let's start off with, what do lenders require, right? So either tax returns, pay stubs, they want you to connect your bank account, or there's no doc lenders too. So whenever they ask you for tax returns, you're gonna give your last two tax returns. And a lot of times, a lot of our clients, this is where they get stuck, right? We work with a lot of business owners, entrepreneurs, people that do their own taxes through their business. And guess what? They most of the time zero out everything, and they don't have income to show when it comes time to wanting to get a loan. So this is something that a lot of entrepreneurs run into, and I'm going to tell you how you can go about it and still be able to qualify for a loan. Now, the next thing would be pay stubs. If you are an entrepreneur, you can give yourself pay stubs, pay yourself as W-2, and be able to have that for proof of income. Now, if you work a W-2, this really unlocks your chance to be able to get 20, 30, 40, 50K. And if you need more, you can stack loans. What we do is we do one loan, which I won't go into it yet, but there's three credit bureaus. And what you can do is get one loan and then one loan under the next one. And if you need one more, you can do another one under the next one. And that allows you to be able to maximize the amount of funding that you can receive. But pay stubs, pretty much they'll require one, sometimes two of the last pay stubs, and that'll be enough for you to be able to qualify, right? They're going to look at how much you earn, they're going to look at your DTI, debt to income ratio, and that's going to allow you to consolidate your debt. Okay, essentially, if you have $30,000 in credit card debt, you want to get a $30,000 personal loan, and you pretty much just pay them off. And instead of having three, four, five, six, seven credit cards with compound interest, which makes it very difficult to pay off, now you would just move into one single payment, one loan, and it's gonna be simple interest, saving you thousands and thousands of dollars. Okay, so when you pay off your cards, the play is that your credit is gonna jump. When it jumps, now this unlocks a whole nother door of funding for you, whether it is getting high limit personal cards or business cards. This is where it gets very, very lucrative. You can get literally up to $150,000 worth of 0% business funding all through your LLC. And even if you maxed those cards, it wouldn't affect anything on your personal profile, meaning your credit wouldn't be affected at all. So if you have a lot of material, a lot of things that you have to buy in your business, and maybe it takes you a month, 2 months, 3 months to be able to like get paid and then pay it off, this would be a great way for you to put under the business cards and then be able to pay it off later without affecting your personal side. Now, let's say you don't have tax returns, you want to get a personal loan because you have a lot of debt and you want to consolidate. Now, you don't have tax returns, let's say, you don't have pay stubs. We do have lenders that will let you connect your bank accounts. So, this is why I tell people, look, like us with my company Abundance Funding, we don't just do applications for you, we actually engineer approvals. Meaning it's not what you do, but how you do it that makes the biggest difference. Right? So instead of just doing a bunch of applications, I ask the client, do you have tax returns? No. Do you have pay stubs? No. So I'm already thinking, okay, which lender can I match you with to get you the approval that you need? Now, do you have the revenue, right? If you're earning 50, 60, 80, $100,000, can we show that in your bank account? You might not have the tax returns, you might not have the pay stubs, but you have the money flowing through your bank account. So I would pretty much create a game plan, see which lenders will connect to the bank account, and that's what we would do. That's how you're able to get the approval. Essentially, you're engineering the approval by knowing what the lender is going to require. Now, let's just say that you couldn't even connect the bank account. Somehow you have different ways that you get paid or whatnot. It's different, right? Entrepreneurs, you run into a lot of people that have different ways they get paid and they can't verify, but they have their money coming in. Now, at that point, last resort, but one of my favorite too, because a lot of entrepreneurs love it, is the no doc lenders. Now, there's no such thing as no doc lenders, but whenever you know what they're looking for and you've done so many applications, I know which lenders 9 times out of 10, they're not going to require for tax returns, for pay stubs, to connect the bank account. And it'll literally be an instant approval without needing to show docs, no documents, nothing to show proof of income. And that is a game changer because someone that couldn't show tax returns, but they wanted a personal loan. They needed it because they needed to consolidate debt, but they didn't have pay stubs. They could not connect the bank account. Maybe it's split in between several accounts. Now we will go into no doc lenders. That's one of my favorite. We apply, instant approval. You get your money within the next 24 hours. Game changer. Okay, so let's go into, if you want to get a personal loan, you have to understand what collections are, what charge offs are, repos, and late payments. Okay, so what a personal loan is, what we work on getting all of our clients is unsecured installment loans or unsecured personal loans. What it means is that there's nothing securing the loan in the case of you defaulting. So, you know how you get a mortgage? Well, the loan is backed up by the house. If you weren't paying the loan, they would come after the house and they would take it. Now, in the case of a car, if you buy a car, they keep the title, you're making payments on the loan, and if you don't pay it anymore, they're going to come after the car. Now, what I love about personal loans to consolidate debt is that there's no collateral. Yeah, you can do personal loans with collateral, but for me, what I prioritize with my clients is getting them loans that don't require collateral. Now, for that to happen, you could not have a collection, a charge off, or a repo 100%, even if it's paid off, even if it's at zero. Because I've had a lot of clients with collections and they're like, oh, I already paid off, it's at zero, it's been at zero, already paid off. And I'm like, okay, well, but a collection is a collection, a charge off is a charge off. The bankers, the lenders, as soon as they see a collection, a charge off, what does that tell you? It means that you didn't pay an account. And what I tell my clients is bankers, lenders, these big institutions, They don't know us personally. They don't know who we are. They don't know what we do. They don't know our story. All they're looking at is our credit report. And if they see a collection, a charge off, or a repo, it'll be instant denial. Now, there are certain banks like credit unions, right, that you can get away with maybe having a collection or maybe a charge off. Is rare, but they'll still approve you if it's a credit union. Credit unions are great. I love Navy Federal. I've gotten multiple loans with Navy Federal. And even when I went through my own situation that I explained in the beginning, I was a victim of those companies that call you to consolidate debt, saying, we'll help you do one payment, don't worry, like we're even gonna help you pay less. And then they end up telling you, yeah, just don't make payments. Just don't make the payments anymore. We're gonna help you negotiate. And they don't tell you they're gonna ruin your credit when you could have just gotten a personal loan, consolidate everything, and kept amazing credit in case you needed it for anything else. Maybe you were gonna buy a house. Maybe you wanted to buy a car. Maybe you wanted to even rent. And they might disqualify you because you're 500 credit score because they ruined it for you, right? So this is why I'm telling you the importance of understanding how to leverage your credit, because I tell people it's better to have and not need than need and not have, right? So a collection essentially means that an account that was not paid and they had a balance, let's say someone didn't pay a credit card, right? And it was for $5,000. Well, when the bank closes it, first they close it as a charge off, they charge it off. They pretty much say, okay, well, we'll take our loss. We're going to write it off as a loss. Now the debt is still there, but they're not trying to collect or nothing. They're just like write it off. They already like pretty much save that money when it comes tax season. But now a third party will come in, a collection company, a third party, not the one that you borrowed from, but another third party will say, hey, I'll buy that debt for pennies on the dollar. And guess what the banker is gonna do? Well, they it was already a loss. So whatever they can make from it, they're double dipping because I already wrote it off. They saved on taxes and now they're selling it for pennies on the dollar. Now, these people now make it into a collection. So you have now a charge off and a collection from one account. So they're literally hitting you twice. And whenever it turns into a collection, now they start trying to collect on you. But the thing is, you do not owe them anything. They bought it off of the original lender. The original lender already wrote it off, which is actually legal, and you're able to remove it with legal actions, right? We do have an in-house attorney that's able to remove all collections, all charge-offs, repos, literally within 45 days, guaranteed, right? So, and the reason why I love using, our attorney versus someone that is just doing regular credit repair is because he's able to use the law to be able to remove this a lot faster than the people that are sending month after month, letters after letters, and it might take 6 to 12 months, right? 6 to 12 months. But once again, as long as you remove it, because if you have a collection, if you have a charge off, if you have a repo, you're going to get instantly denied, right? But it's as simple as literally hiring someone like an attorney, and they'll remove it from you and it won't exist anymore. It's not going to pop up on your credit report. What I tell all of our clients is literally your credit is just paperwork. You add paperwork, you delete paperwork, right? You add trade lines, you boost your credit history, you boost your lines of credit by being added into an authorized user, and that's how you're able to pretty much add to your credit or delete from your credit. It's all very simple paperwork, but it just takes understanding. And this is why I'm teaching certain things that I wish I knew back then when I could have just done a fast personal loan, right? But if you don't know, you don't know. The last thing is late payments. If you've had a late payment within the last 3 to 6 months, it'll be an instant denial, right? But if you really, really need the money, if you really need to consolidate, you could literally just do credit repair and you can just delete those payments and now you can apply. It might take 1 month or 2 months or 3 months to delete the payments, but it's worth it because now it's not going to be there anymore, right? If it's been over a year, you're good to go to get a personal loan. But if it's been less than a year, especially less than 6 months, it's going to be very difficult. I would, at that point, I would go to lenders that are going to make you connect your bank account, right? Because they're going to see that you're able to pay a lot better without asking, because the other ones wouldn't ask for tax returns or pay stubs because you would already be denied due to the late payments. But lenders that focus on connecting your bank account, they're more focused on what are you bringing in per month versus what is your credit. Because if they see that you have the income, then they're going to do it. They're going to lend you the money, right? So the next thing is comparables. This is something that you can engineer, right? Like I build credit for clients from scratch. So if they've never used credit, I've built from nothing to 800 plus to be able to get instant approvals, vehicle loans, personal loans, high limit cards, like you name it. Like you just have to be creative and understand what you're doing when it comes to credit. But one of the things is comparables, right? What is comparables? Comparables is the lenders taking a look at what have you paid in the past. Have you had a loan in the past? A personal loan? Have you had a vehicle loan? Have you had a secure loan? How many cards have you had? For how long have you had them, right? That is the comparables. When we're talking about personal loans to consolidate debt, they're going to want to see if you've used and paid off a personal loan, right? So if you've never paid off a personal loan, you've never gotten one before, it's going to be very difficult if you're below the 680, have never had one, and it's going to depend now, do you have tax returns or not? If they're strong, you can get approved, but we would still need to add maybe authorized user. We would have to see what history you have. And if you don't have history, I would recommend go for a small amount, 20K or less. Pay it off. Now we can get you a bigger one, right? Because now you're building comparables. Now, what you can do for comparables is do a secured loan where you literally pledge or you use your own money to secure a loan. So you're pretty much borrowing against your own money. And this is a play that I love doing with Navy Federal. It's called the pledge loan. And this is how I've built a lot of profiles. So you use your own money, you get a secured loan, and then within the next week, couple days, but at least a week would be great, pay it off 95%. Now, what that's gonna do is let the lenders know that you have some cash because you have a secured loan, meaning it's out of your own money. So even though you paid it off, right? It shows that you have that money. Now, when you pay it off 95%, that money is gonna come back right to you. Like you just getting a couple $1,000. You can do with 500, but the more the better, right? You can do a couple $1,000, like $5,000. You do the secure loan. Within the next week, you pay it pretty much 95% off. Now it's going to report the next day as if you've paid off 95% of a loan, which is going to trigger now lenders to look at your profile and say, well, he's almost about to pay off the loan. I want to be the next lender to give him the loan. I want to give him an opportunity because he's almost paid off this loan very fast. That's what they're thinking. So you're building already comparables, and that move alone will boost your credit drastically. It'll give you diversification in your credit, good payment history, and it'll give you now comparable to be able to get more loans faster in the future. Okay, so then the next thing, the last thing that we really look at is inquiries. What is an inquiry? An inquiry is when a lender checks your credit. So an inquiry is pretty much they're just pulling your credit. And every time they pull your credit, it lets other lenders know that you're looking for funding, you're looking for a car, you're looking for money, right? And so rule of thumb, in the last 6 months, if you've gotten your credit pulled more than 4 times, chances are you're gonna get denied. Like, if you really want to get approved, once again, like for us in my company, Abundance Funding, we don't just do applications and hope for the best and, hopefully they approve it. No, we engineer approvals, which means if you've had over 4 inquiries in the last 6 months, we would just have to delete those inquiries. It's credit repair. It's paperwork. Very simple. We delete them. It looks like you never got any type of funding or you never even tried to apply. Now we go and apply and now you got an approval. But if you would have left those inquiries, you would have just gotten a denial. And when you get a denial, it makes it a lot more difficult for lenders to approve you because they're like, well, why did that lender give you a denial? Well, I should probably be careful with you. Maybe I should watch out. Maybe I should look deeper. Maybe I should ask you for tax returns. I should ask you for more documentation. They make it more difficult, right? So for us, easiest way, wipe it out. Delete them. Now we can apply and get you that approval that you need. So there's 3 bureaus, and this is where we can get strategic getting you those approvals too. We have Equifax, TransUnion, and Experian. Okay, so let's just say we're doing a personal loan under Equifax, and let's just say it's Discover loan, right? We use a lot of different lenders, but Discover generally will pull from Equifax. Let's just say we get you a personal loan, we engineer, right? Based on what you have, based on how much you need, how soon, for what, and your overall credit profile. We end up thinking, okay, we'll Discover, let's go ahead and pull the trigger. Boom, instant approval, you receive your money. But let's just say you need a little bit more. Maybe the loan was only 20K, 25, maybe 30K, and you're like, man, I needed 50, okay? Let's go ahead and move over here. Let's see if you have comparables under these lenders. Let's see how your overall credit is. Can you verify income? And we might be able to do something else like a Navy Federal loan, right? That pulls TransUnion. We can do a live stream. We can do different lenders that essentially will only pull this lender. So what happens? We just got you a loan under Equifax. They pulled your credit here only. When this lender pulls your credit, they're not gonna see that they just pulled your credit and you just got a loan over here. They're only looking at TransUnion, right? So then the last one, if the client, let's say we got them another 20 and they have the 15, they're like, man, can we just do a little bit more? We can come over here and do something like a SoFi loan, right? SoFi personal debt consolidation loan. They'll pull Experian. They won't see over here. Sometimes they'll pull Experian and TransUnion. So you just have to be careful in the sequence of the lenders that you do because you want to do the more secure, the faster, the more the ones that you know they're gonna get approved so that you can get that approval and then we can continue with the next ones, engineering the approval. So once again, if you're looking at consolidating debt, don't wing it. Let us know if you need help. Comment down below, funding, and we'll give you a free consultation of your overall profile, how much you need, how soon, for what. We're gonna take a look at your credit score. We're gonna take a look at if you have tax returns, pay stubs, if you're able to connect your bank account, or we got to take you to no doc lenders. Then we're going to see if there's possibly any collections, charge-offs, maybe repos, maybe late payments that you're not aware of because I've had a lot of clients that they're like, what the hell is this collection? I'm like, I don't know. Like, that's literally what I'm seeing. Like, what you're seeing, that's what I'm seeing, right? And they're like, okay, well, let's just, what can we do about it? Well, let's just delete it, right? We help people delete it super fast. It's just paperwork. Comparables. If you need to build comparables, we'll work on that too. And then inquiries are very important, understanding which lender we can use under which bureau based on the inquiries too. And if you have more than four in the last 6 months, we can just delete them. So once again, do not stop making payments for those companies that are telling you to consolidate debt but not paying the debt. Okay. Get a personal loan. And if you need help, comment down below funding.